Hey traders, checking in on the stock market today. So started slow, picked up volatility with headlines. I'll talk a bit about the headlines and the current situation and how I am trading relative to those headlines. And we had a little bit of a character shift today as far as our sectors and how they relate to each other. Let's check it all out. So before we get into it, I just want to differentiate between Trader Dan and Human Dan. Trader Dan looks at the headlines, looks at this as a game and numbers flashing on the screen. Human Dan realizes there's lives at stake, there's people on the ground, and it's a serious situation. So because this is trading and technical analysis, whenever I'm talking about anything in the real world, I am looking at it through the eyes of Trader Dan. So it may come off as cold or dismissive, but that's how I view things and why I'm able to eliminate my emotions from trading. So there's going to be a lot of games with these headlines, and there's always something. We have periods of calm stability as far as headlines are concerned, and then we have periods with high headlines or a lot of volatility and significant amount of headlines. And if you remember, going back to the Trump-China trade war, how big of a joke that entire scenario was and how the market would react to headlines in both directions, it became comical really quickly, and then it stayed comical 90% of the time that was taking place. So right now we're in a scenario where we're getting headline reactions, keeping in mind that headlines by design are to trigger our emotions, whether it's fear, usually it's fear. That's the design. And all you have to do is, being a content creator, I can put out the most bullish, massive upside, gonna make $1 million with $10 post. And if I post anything fearful, it will always get more views, more clicks, more everything. That's just the way that human emotions work. So if I want clicks on my article, on my headline, it's fear-inducing. And you see people that create content do that all the time. Whatever, do you. That's what you got to do for the fear clicks, go for it. But just keep in mind, that's a giant game that's being played right now. And today was just the perfect example. Today we dumped down because it comes out that the Ukrainian president says an attack is scheduled for Wednesday. How big of a joke is that? I mean, I'm making fun of that, saying, oh, you know, it's the element of surprise, no more. This is the tactic of the element of pre-scheduling in advance publicly your invasion to the world. It's a joke. So it then comes out that the president was being ironic. And next thing you know, the price is exactly back to where we were. And the technical setups of what was the most likely scenario all played out. And I'll show you what those were in just a second. But there were many names that were looking for hourly higher lows. And on the bearish reaction to the headlines, we held support. We set hourly higher lows. So again, the rule of thumb is stick to the charts. You want to be aware of headlines because you want to be aware, okay, is the 5-minute RSI about to get extreme? I want that information. As far as what the words are that cause the 5-minute RSI to get extreme, I don't care about that much. You're going to see bullish headlines and bearish headlines that don't relate to anything concrete changing. You know, you'll have a headline that says U.S. officials voice that we're close to a diplomatic solution with Russia, and the market's going to go up on that. In reality, is that the case? We don't know. But the market will respond to those headlines, and those headlines will keep coming out because, again, it's a heightened environment of fear, and that gets the clicks. And that's the world we live in, and that's the game we're playing. So moving on to the charts. Again, as much as you can, just view them as two separate things. It's not the market reacting to actual troops being in the Ukraine. For me, it's the video game numbers responding to the words that are in the headline as the algos and the bots pick up on those words and place trades accordingly. So on SPY, we are looking for a weekly tightening range is the most, I am looking for a weekly tightening range is the most likely scenario through February. It'll break eventually, but I'm scouting a weekly higher low. There's a lot of space for that to form. With where we stand right now on SPY, we are $18 above support, and we are $19 below resistance. We are right in the middle of this range, and it's a very large range. And we know after significant volatility comes equilibriums. So that's what I'm scouting. On the daily here, we have a lower wick. We have the hourly, and we'll go to the S&P 500 futures here because we had a bounce overnight, bear flag. So we hit resistance and dropped to lower lows. We bounced through the morning. We hit resistance and it was just a lower high, but we held support. So now if the bulls can turn around and break these resistances, the daily bounce will be underway. And so SPY has to break the high of today tomorrow. for the daily bounce to be underway. From there, we're going to scout a daily lower high in SPY. Why? This was a massive pullback. Anything under 457.88 is a daily lower high. Keep in mind, we got the Fed minutes on Wednesday. That's going to be a scenario, or I should say an event that leads to volatility. So just be aware that that's coming. It'll be very notable to me if we see a daily lower high and lower low this week. For me, that'll increase the odds that this weekly chart can break bear. But I need to see the volume behind it. It needs to be high bear volume behind it for that to be the case. If we bounce for a couple days and create space for a higher low, again, that just increases the time where we can stay sideways within this range and chop around a bit. So it's an important day for the bulls to go green tomorrow, in my opinion. And if we do go green, it will increase my opinion for a weekly higher low to be the most likely scenario. I'm on the wrong set of charts. So a lot of names need to confirm hourly trend changes, and SPY is one of them into tomorrow. So if we open higher tomorrow, we're going to be well aware that we need to confirm an hourly trend change during regular trading hours. And if we open lower, the bears will resume their complete control because SPY is in an hourly downtrend right now. And any name that's seeing daily consolidation and is in an hourly downtrend, the bears have full control as long as that hourly downtrend remains. So that's my guide for a lot of individual names. The NASDAQ, there was a character shift today. So to end last week, the NASDAQ was consistently weaker. QQQ was a lead bear sector, and we had growth names doing better. IWM held on better. And today that changed. QQQ was the strongest bull sector today. So a little bit of a difference going on. And I felt it and I noticed it because my positioning is, for the most part, bullish USMJ and bearish QQQ. And while USMJ closed green, all of those positions are green for me, my bearish QQQ position closed red, and to end last week, that was not the case. So it took me a little bit more work and a little bit of day trading to even that balance out and ensure that my account goes green today. And again, last week, I didn't really have to do a whole lot. I positioned myself and watched it play out, and it went well. So QQQ bulls, that was notable because the hourly bounce created space. So here's your hourly bounce all morning. And then you have your bearish headlines. We hold the hourly higher low. Again, forget headlines. Take headlines out of the picture. If you show me this chart, I wouldn't think anything happened. Solid bounce. Still have to change the hourly trend. Plenty of space. Hourly higher low on a pullback. Great. Now we scout an hourly equilibrium because the size of the pullback was fairly significant. If you show me QQQ, I see, no, not even the volume. Where's the bear volume? So bear volume for 20 minutes and then plenty of bull volume to offset it. And that's because the candle changed over and that lower wick on the green candle had a good chunk of that bear volume. That 20 minutes of bear volume, how much of that is showing up in that green candle? The answer is 10 minutes of that. So half that bear volume. And that's why you got to zoom in and get those details, because I look at this and say, well, there's no bear volume and a solid amount of bull volume. If I zoom into the 5-minute time frame, I can see that half of the bear volume is showing up on the green hourly candle. And it's that lower wick right there. So can QQQ bulls confirm the hourly trend change? If we break the high of today tomorrow, the hourly trend change confirms. And we zoom out and we scout the daily lower high, anything under 366.81. So we're positioned for the bulls to attempt a bounce here. And again, if we get that daily bounce, that increases the odds that we can set a weekly high or low. If the sector is going to drop to a weekly low or low, QQQ would be one of the first to do it, in my opinion, because it's closer to doing so than many others. So I still have an SQQQ position open overnight. And if we confirm an hourly trend change to the bulls, I will lighten that position up. SMH. So daily, bears keeping control, hourly downtrend, lower high and lower low. And the hourly trend's our guide. We have no daily bounce as long as we're in an hourly downtrend. We're scouting a weekly high or low attempt. First step would be an hourly trend change to the bulls. Then we zoom out and scout a daily lower high. Due to the size of the pullback, there's a lot of space for a daily lower high to be the result of the next bounce. Patient bears are waiting and scouting a daily lower high from here. They're saying, okay, we got that initial drop on the rush of fear out of the way on Friday. We saw a little bit more today. Perhaps the market smartened up a little bit regarding these headlines in the short term because of how today played out. but tons of space for a daily lower high. NVDA stood out as a lead bull today. They've got earnings on Thursday or Wednesday, and that's going to be a significant impact to semiconductors. And you can see NVDA held the low of Friday. Any name that held the low of Friday stands out a bit stronger, as many names did not. Tesla stood out as a lead bull as well. Held the low of Friday. Hourly trend change trying to take shape. Low of the day, high of the day, hourly higher low, but ran out of time. Can the bulls confirm the hourly trend change tomorrow? If we do, we're looking back up at our line in the sand resistance zone. Tons of rejections in the 940s. I'm still in a small NIO swing position as long as we're in a daily uptrend. And again, I'm offsetting this position with some SQQQ. But looking for a daily higher low compared to 2273. It clearly stood out as weaker than Tesla today, which was new because it stood out as stronger than Tesla a good bit last week, but not today. So again, just part of that little character shift in our sectors and how they relate to each other the last 3 days. Healthcare. Weekly, we're scouting a higher low. But bulls need an hourly trend change back in their favor. And actually, it looks like we confirmed an hourly trend change right into the close. Obviously, no follow through. Double top by a penny. But if that hourly trend change confirms, we zoom out, we scout the daily lower high. And again, we can chop around within this range for a week or two. Financial sector, notable drop. Still tons of space for the daily higher low. One major thing I'm watching is our bounce leader. Our sector bounce leader. Do the bears confirm a daily downtrend when we bounce from here? That would be notable to me. That would say, okay, bears are making a statement in our previously stronger sectors. But it too is looking for a weekly higher low. High, low, lower high, tons of space for the weekly higher low. It's the most likely scenario, in my opinion, in a lot of places. I did trade XLF today. So I do morning prep every day, 90 minutes. I had zero intention of trading XLF today. And the trade came to me. So what's my edge? I like oversold bounces. I like falling wedges. Okay. So I'm sitting there doing nothing all morning because it's very slow. And I'm in swing positions and I'm monitoring those swing positions and watching how things play out. And I see this XLF drop. And we're only just getting to 15-minute oversold. So I'm not interested in it because we're crushed. We're not crushed on any time frame with RSI. But I recognize QQQ bulls starting to shift some momentum. QQQ just traded sideways to start the morning, and the bulls started to shape up the potential for a new bull break and new high of the day. So I looked at that as, okay, possibly keeping an eye on the bulls. And I also looked at the fact that XLF at that point in time was down, I think, 2% on the day. So, okay, we're beat up even though we're not oversold on short-term time frames. And then what got my attention was the new low of the day that lacked follow-through. And that was right here. So low of the day is 39.47. We hit a new low of the day by 2 pennies and don't get any follow-through. Okay, I'll try a bottom fish. Why not? We're down 2%, scouting just a 15-minute bounce. And entered a position here using FAS, the 3 times leveraged ETF bull. And I was manually, with falling wedges, manual stop losses are better because, again, you break support and don't see follow through. And if I'm using a hard stop line and we break support, I'm going to stop out. But if I'm a newer trader, I can't manual stop loss because that's how you get the deer in the headlights look and you never click the button and it drops 5% and now you're in a huge bag holding position and you feel sick to your stomach. You have to be able to have experience to prove to, I have to prove to myself for 11 years that I will click that button eventually. I will not let it get to the point where I am now down an insane amount and it's going to take me 2 weeks to make that back. But it took a long time for me to get there because there were plenty of times where I sat there with my finger on the sell button and never clicked it. And it fell through the level I was going to click it on and it kept dropping and I would wait for the bounce and it keeps dropping. I've been there. I've made every mistake that you can make. But I have proven to myself over the years that I'm not that person anymore. I'm not that trader anymore. So my point is, in the chat room, I said, okay, I'm making this entry. If XLF breaks 39.40, I will stop out. And I was watching this, And I saw that 39.40 level break going straight into the most powerful bounce that we had seen in the last 15 plus minutes. And so I quickly said, I'm manually doing my stop loss here. I am not stopping out on that penny. And that would have been me stopping out at the low of the day. 5 years ago, I stop out at the low of the day. Now I don't, because I recognized exactly what I wanted to see, which was that level break straight into a convincing bounce. So that ended up being a day maker for me. And I was all out of that trade, scaling out, and I was all out before this consolidation here. Could have seen another leg up, but I was busy with a contractor. So 15-minute time frame, stair-step pattern. Again, stair-step trading strategy on our YouTube channel. There was a long and a short signal for both. And a long signal. If I am playing the stair-step strategy on the 15-minute time frame for XLF, the long signal is when 39.53 breaks, higher low every single candle. The short signal is when 39.83 breaks, lower high every single candle. The long signal is when 39.49 breaks, higher low every single candle into the close. And if you're using a 3 times leveraged ETF, that is a solid day. It is not often that clean and clear, but it's nice when it is. So that's how I offset the fact that QQQ was stronger today, and that's where my bear exposure is. So the day maker on XLF ensured that my account was green in the end. IWM. So bulls scouting the daily higher low, broke the low of Friday, not much follow through, but the bulls must confirm an hourly trend change back in their favor. The character shift was very notable. IWM and QQQ were lead bulls on the morning. Let's see if it's very clear for us comparing these two. They're going to be too overlapped because they're too similar. So IWM is this one and QQQ is down here. So IWM and QQQ stood out as lead bulls first thing. They're on team bull. XLV and XLF were clearly team bear. From that point, after the first 30 minutes of trading, a character shift went underway. And again, when I'm staring at correlations, this is where I'm getting little details that I can act on. And it was a new low of the day on IWM, the third 15-minute candle, and then a decent drop. QQQ did not see that. It saw a new high of the day. So IWM bounced when QQQ saw a new high of the day, but at that point, it's in a 15-minute downtrend. And it was weaker from that point forward. Let's see if you can really pinpoint it on the 5-minute. 10:30 a.m. is when everything changed. Because 10:30 a.m. we hit a new low of the day, confirming a 5-minute downtrend. And QQQ did not see a new low of the day there. So from that point forward, IWM and growth showed weakness compared to QQQ. So to start the morning, I'm positioned well with my swings. Later in the morning, I can recognize, okay, this is not the same as last week. It's a bit different, and I'm going to have to work if I'm going to ensure that I'm green today, because I can't just sit back and let my swing trades work, because QQQ is the lead bull on the morning. But it all boils down to the hourly. IWM needs an hourly trend change back to the bulls for a daily higher low to be set, anything above 194.92. And if we get that daily higher low set, it's then up to the bulls to continue this daily uptrend, and we would need increasing bull volume for that to take shape, because the size of the pullback is pretty decent. The last thing that these bulls want to see, whether it's XBI or IWM or anybody, is a confirmed daily downtrend, because that is a confirmed daily uptrend with zero follow through, which means zoom out and scout a weekly bear flag. So bulls want that daily higher low to form tomorrow. It's a pretty important day tomorrow for IWM and XBI and growth names. So here's on XBI, same thing. Daily must set this higher low, anything above 88.43, but it's already a bit more pullback than the bulls want to see, because if we go from a confirmed daily trend change straight into a daily downtrend, that weekly bounce is not convincing. Bulls need the daily higher low, and they need market bulls to help head back to that recent high. But at this point, that's 7% away. That's a tall mountain to climb. So I'm scouting the higher lows in the short term, but well aware that daily lower highs are going to be forming on a lot of individual names and a lot of individual sectors. MSOS continues to look great. And again, this is the majority of my swing. I would say, my MSOS exposure is probably 3 to 4 times what it is on NIO. So I got a tiny little NIO swing, 4 times as much USMJ. That's my bull exposure right now. I've got some crypto bull exposure, and that's a factor as well. But we'll talk about that in a crypto video. So MSOS, bulls would love to trade sideways. Trade sideways while the market pulls back. And then when the market bounces, what's going to happen? We're going to go right back up and test that high. So great day, great win for the bulls. And the pattern recently has been bull moves into the end of the day. And we know the broader market was bouncing as well, but MSOS, daily inside bar, break it bull, and we're looking right back at the bounce high. CGC dumped 9%. Completely different. Canadian MJ was all red. I'm looking at my screen, down 6%, 4%, 9%. And I'm looking at my USMJ screen, and it's up 0.2, 2%, 1%. Very big difference. We're scouting a CGC daily high or low, but clearly a big time drop not seen in USMJ, which is why I am focused a bit more on USMJ this time around, the past week or two. Gold following through. Bulls are pleased with how things are shaping up. And the relationship has been bearish Russia headlines, market drops, oil up, metals up. So if we get diplomacy headlines out of Russia, we're watching for market up, oil down, metals down. We haven't had one of those headlines yet, but that's something to keep an eye out for from here. But overall, we got a solid daily and 4-hour uptrend. We know gold broke the 2-week level that was key for me. And if we break 1877, we're then breaking multiple levels and following through. So again, the metals are bullish, and I keep getting questions. People are asking what I am doing with the metals. Do you? Don't worry about what I'm doing with the metals. I am not interested in gold, and I have exposure. My metals net worth is more the last 2 days than it was last week. So I have exposure. It's just not significant. But again, when I look at this move on gold, I see a 5% move over weeks. Like, oh man, big bull move, 5%. I traded Mana today on the hourly time frame. I entered at 277, and by the high of today, 5 hours later, it's 4.5%. Pretty much 2.5 weeks of a really strong gold bull move was seen on a week hourly bounce in the crypto space. So for me, it just doesn't have the volatility to keep me caring at all about it. Doesn't mean it won't go up. Doesn't mean it won't break out. Doesn't mean it won't go to all-time highs. It just means that I have different criteria as a trader, personal to me, as to what I'm interested in, and having my money sit in something. If I had cash that I just wasn't using and it's just sitting there, absolutely, I'm putting it in the metals. But if I'm using my capital, I'm not going to put it in something that, I hope for a 10% move over a couple weeks. And again, that's just me personally. If someone said, should I be in a bullish gold position, I'd ask a lot of follow-up questions, but the bottom line would be yes. So miners are trying to break out as well, and they are testing their key resistance, 33.19. So that level needs to break. Then 35.08 is the next major level after that. And this is the miners attempting to shift momentum. Again, it's a falling wedge-like pattern where you've got something like this. I don't really like that resistance line, but I would have it like this. 3 touches, valid resistance line, 3 touches of support. So it's a falling wedge that's breaking out. 2-month time frame. And if you want volatility, it's in the leveraged ETFs for these miners, JNUG and NUGT. That's where the volatility is on the metals move. And if you go back and look historically on the metals moves, those names went significantly to the upside. Silver still has work to do. Silver is lagging. Silver is not breaking its key level for me, 24.70, and we still are 4% away from that level. Silver has gained on gold today. Silver lagged gold all last week. Today, it gained. How can I say that? Because we never saw 4-hour consolidation. While gold saw a 4-hour bull flag, we just kept grinding higher. But still a lot of work to do. If I'm going to be a full-on confident metals bull, I want gold to break. It already did. I want the miners to break. They're testing resistance. And I want silver to break as well. And I want copper to break. Copper was surprisingly red Friday. Trying to recover. But look at the copper 2-month time frame. Or monthly. It's similar to gold. So again, I want full steam ahead on these metals with everybody bullish to get everybody interested. But so far, it's just gold. Those other names have to follow. Miners got to follow, then silver's got to follow for complete confidence. Doesn't mean you have to wait for that to happen to be in a position. It means you can be in a position and be unsure of things as long as you're stop set and you're letting the trade game plan play out. And then as soon as the other names follow, you gain confidence. Maybe that means you buy the next consolidation. Maybe you average up a little bit and increase position size. But long story short, the metals are looking good. Gold is looking good for the bulls. I'm just not interested. I have other focuses, and the USMJ focus that I've had has been significant the last 2 weeks. And again, the percentage moves that they have seen far exceed what gold is doing over a prolonged period of time. So, all about the bulls tomorrow. Again, for IWM, XBI, it's a pretty important day to be green tomorrow. And we'll see if a daily bounce gets going on SPY and QQQ. And if it does, lots of space for daily lower highs in a lot of individual names. Block out the noise. Be aware of the headlines. Be aware when the market is reacting to a headline. Read the headline. Don't base any of your decisions on that headline. All of your decisions are based on price levels, and you're reacting to those price levels. All right. Do good things. I don't have any end of the day content. Too much going on today. Spring is starting. It's mid-February, but there's some flowers coming out there. So I'll record tomorrow what the first signs of spring are. Do good things.